I just want to be on the right side of constraints. I see just constraints for years in the likes of uranium, the likes of PGMs, the likes of even coal, tin. Like I love being long those metals because I can see just the constraints stacked up, and I want to avoid anything that's valuation is going to be hindered by these constraints that I see keep stacking up.
Today's episode is made possible by Days to Expiry, a tool that I co-created with Florian and Lovis to help navigate the complex world of options trading. As someone who has extensively used options to enhance their long-term investments, I can attest to the importance of getting the right signals from a sea of trading noise. Achieving financial freedom is a crucial step towards personal freedom, a topic that many of our guests have already spoken about at length. To learn more about how I am working towards my own financial goals, visit daystoexpiry.com.
Welcome to our next episode of the Covered Call. We have our good friend Trader Ferg here with us for the second time. About a year ago, I think a little bit more than a year ago, Ferg was on before, and he basically laid out a worldview of, let's call it, energy fantasy prevailing in big swaths of the world. I think you had a whole thesis just published about how China is mispriced at the time, like Chinese tech stocks. You, I think, very true to your brand, we're talking about this, that hated sectors, the more hated, the better, because then they end up outperforming over time. That basically freedom comes from, in your personal life, freedom comes from not needing anyone's permission to do what you want to do. And, all this, it was an awesome conversation, but so now it's 1 year later, and I think it would be super cool to check on some of your theses and how they played out, where they're at. And of course, a lot has happened, right? I mean, this year is barely 5 months old, and I guess we're almost halfway through. So it's, we're roughly halfway through 2026, but I remember the first 2-3 months of this year felt like 3 years basically. So there's a lot going on.
Yeah, sure has.
Well, so welcome back. Thanks so much for taking the time again.
Thank you for having me back on. I always love chatting with you both. Yeah, love the show. And always happy to talk markets and financial freedom and all that comes with it. Yeah, no, it's my big passion project.
Yeah, Ferg, been a while. We met also face-to-face in Bali, and now we're calling. I'm in China, you're in Bali in Indonesia, and Lovis is in Dallas in Texas. So really grateful that we can connect like that. Grateful for the time and the technology. I actually just wanted to ask if you could, give us how you're seeing things. I know it's a big question, but it's just that with so many things going on, how are you seeing things at the moment, and what's your framework to try and navigate the shifting sands?
Yeah, well, it's obviously, just getting, like, the news is coming at us like a fire hose. There's just, if you want to focus it on the short term, there's never been more noise in all my times in the market. Like, it feels like even clean setups in the market, you're one Trump tweet away from getting completely wrong-sided. And so I think times like this, you've really got to zoom out and just focus on what matters, because even obvious stuff, if you try and trade short-term, and I inherently know I'm a terrible short-term trader, but if you even try and focus on short-term signal, it's really, really tough. And so these are times that I like to just like step back and focus on, like, what are some really big trends that I can try and lock onto and ride for like a really long time, like really compound here. And anything that I'm going to trade short term, it's something that I was already bullish on medium and long term. I just want to get like a really nice entry. And so something that ticks those boxes at the moment for me is like thermal coal. Like I already liked the trend. I liked where it was going. I thought it was completely overplayed, the fact that the world was going to be off coal by 2030. And yet here we are with Russ Laufen off, still off, largely offline. I think 2 trains have been restarted in Qatar, but all that LNG is no longer floating around in the world. So you can trade around that. You can make decisions immediately because we know there's a time period to restart. We know that obviously transiting through the straits is still very limited. And so that kind of stacks on to what a thesis I already had. And so I love those ones where I can just like lean into something that I already had the whole thesis built out. and it just is an additional catalyst. And then I guess, like, stepping right back, my big view is that we're going into sort of a more inflationary time, and I just want to do the best to protect my capital and lock onto trends that are really well positioned there. And that comes with the sort of my positioning of always been in sort of hated areas. So I was playing with a theme in my last piece. It was like JOMO, like areas that instead of FOMO, where everyone's fear of missing out and like piling on, kind of like a semiconductor stocks where everyone's sort of just trying to jump on it while it's running hot. You got like joy of missing out, where you look at the past performance and there's just a sigh of relief that you weren't involved in it because it was such a train wreck. Yet some of those areas are actually really starting to perform. And one that's kind of, I just wrote about, and it's going to feature quite heavily in I've got like an income portfolio I'm going to release in the next week or so. And that's a lot of the Chinese SOEs, the heavy industry, like those are just hated. They've generally been really shareholder unfriendly. They've been more focused on sort of the Chinese sort of welfare state, not doing stuff in shareholders' interests. And there's been a lot of reforms lately. And so that's an example of a sector that I see turning around. Shareholder returns are really improving. A lot of these companies are just dirt cheap, paying 5-6% dividends. And no one cares. Even when I tell people about it, they're like, that's interesting, but no thanks. And so, yeah, but that would be just a quick run through what I'm kind of focused on. I'm happy to dive into any particular theme you want to.
So you mentioned, of course, Iran, Strait of Hormuz being closed and stuff. Just outside of markets, how's Bali affected? Like, is there any repercussions, energy shortage, gas shortage, whatever, that you can tell?
Surprisingly little, honestly. I've been amazed at the resiliency across the board with it all. I have a lot of friends that are experts in energy, and they've been beating the drum about what's coming down the line. But for now, seems just working through storage, and it's almost like a sort of an analogy of like a shop just working through its inventory in the storage out the back, but nothing's been replaced. Like, there's going to be consequences, but they just haven't arrived yet. And obviously seen it show up in some of the poorer emerging economies, like sort of the likes of Pakistan and Bangladesh were the first. Bali's quite lucky because it's not self-sufficient, but it's self-sufficient enough. I think it's like for imports, it only imports 40-50% of its fuel versus the likes of Thailand, which is up around 90. So they were the first to sort of have shortages in their gas stations, whereas Bali never really felt it, like Australia as well. But yeah, for now, surprisingly, everything seems it hasn't really shown up at all. Even in pricing hasn't shown up.
Yeah, it's weird, right? Because I'm reading all this stuff and I'm worried, and I feel like, hey, something's got to give if you've taken 20% of the supply offline. And it seems like not only markets don't care, markets are shooting higher, and then on the ground, you don't really hear any panic. You don't hear the governments. Like, I don't hear, for example, the government in Singapore saying, hey, you need to change your lifestyle a little bit until this thing gets sorted out. Maybe think about how you can carpool or putting on restrictions. There's nothing, right? And comparing it, I'm just wondering if it's similar to what happened with COVID, where it was nothing, and then one morning it was everything.
Yeah,
I'm wondering how you think about it.
Yeah, well, this is a big, because I track this quite closely because I have large investments in coal and in thermal coal in particular at the moment. One of the things you can now see so Qatar was the provider for most of the destination guaranteed contracts. And so when that 20% sort of got taken off, it wasn't only those contracts going, those contracts were some of the lower cost fixed contracts, in particular for Asia. And so what's left with that being offline, a lot of that's destination flexible. And which just essentially means like a lot of these cargoes can be rerouted mid-destination, so they can go to the highest bidder. And yet here we have the fact that Asia's still short and Europe hasn't. Europe's storage is at a record low, and there's essentially going to have to be a bidding war. Both of them were really just hoping that the Strait will open and that gas will start flowing again. There was something like 19 full LNG carriers just waiting to transit, and if that had transited before, so there's a timeline with this as well, because we're heading into peak Asian cooling season. So Asian demand really ramps through June, July, August. And then from there, demand's held up because then you're heading into Northern Hemisphere heating season. And also the Europeans have got to refill their storage. So at the moment, there's kind of a just sit on my hands and hope this goes away, hope the price rolls over so we can refill cheaply, because otherwise it's going to blow all our budgets. So the Europeans haven't really been filling it all. So it's still bottom of tank. So it's quite similar to 2022, where, there was kind of a whole lot of hand sitting hoping it gets better. And at the moment, the Asians are completely outbidding the Europeans. So JKM, the Asian LNG trackers, remain consistently above TTF. And so all the LNG is just getting routed to the likes of Korea, Taiwan, and and Japan, rest of the sort of wealthy Asians. And Europe's not refilling its storage at the rate. And so whenever I watch this sort of stuff, I'm like, oh, there has to be a point at which they realize, that they haven't filled enough, and that there has to be the start of somewhat of a bidding war. It's a similar point I see with a lot of the consequences of whether it's products, whether it's oil, whether it's LNG, of not passing through the strait. It's going to be a consequence. Food, along corn and sugar and a little bit of wheat. Just see, a whole lot of planting seasons got missed, a whole lot of fertilizer didn't get out, and there will be consequences from that. It's already started to work, but I think we're in, I don't know particularly the reasons of why there's no almost front running of any of this, but it feels like no one's going to believe it till they actually see it show up physically. And I think with a lot of this with markets is just not the active participation that there used to be. There's a lot more passive of the retail that's left. It's a lot more speculative. There's a lot more algo-driven trading. Like I even see it with a company I own a large position in it. When they release their earnings, it's a coal company. They release their earnings, and obviously they're looking at the last quarter. And yet when the earnings were released, coal had just rallied 30%, and the stock sold off sort of 5% on the earnings, which are backward looking, even though the coal price was absolutely ripping at the time. And I'm just like, has anyone even paying attention to what's actually happening? And so, I had a chat to a few friends, and I don't know how much is just, there's a real disconnect in a lot of companies that, I'm not, I just know there will be consequences of what we're seeing, and it pays just to be patient and understand that, what I'd like mentioned before is if I've got a longer term view as well, that anything I deem stupidity, I'll just add more in those times.
So you mentioned coal a few times. Are you talking about the coal companies that you've covered before, like the majors like Whitehaven and stuff like that, or any special?
No, so this is more thermal, seaborne thermal. And so with you really narrow down the universe, because quite a few of them have now become like with Whitehaven, they used to be very thermal heavy, and then they went into met coal, which is also used for steel making. And so that's, I'm trying to focus more on the pure plays. So pure plays, you really only narrow it down to like some New Hope. Even Yarn Coal's now acquired met coal, so that's now mixed. But New Hope, Fung Ella's pure play, and that's that's really it. And what has just been announced as well that I don't think the market's even digested, because it's only a day or two ago got announced, is Indonesia is now going to essentially run all its commodities through the state. Like, they're not going to allow the, the companies to sell themselves internationally. So it's that's absolutely massive news, because Indonesia's massive exporter of thermal coal, palm oil, and nickel. And it was interesting just to see the market reaction across it. Like a lot of the coal companies themselves got smashed, fired 10% on the news. A lot of palm oil companies took similar treatment. And yeah, it's just another tightening mechanism on what I already viewed as kind of an attractive market, and something I hadn't even mentioned, and I never trade it, but with El Nino is actually looking quite high probability at the moment, and that would result in a hotter than average summer or cooling season here, and that would boost demand as well. But yeah, don't ever trade a weather. That's just a sort of a free call option, I guess.
What about, I think last time you said something to the accord of, energy transition is not, while everybody seems to want it, it's not happening in that sense. It's more like energy addition is happening, right? Like maybe solar and wind and stuff is added to the grid in many places in a meaningful way. But do you think that maybe that's why the Europeans, we love to pick on the Germans, and of course I'm German, right? So I'm allowed to. But do you think that they just kind of think like, no, but we have all this renewable, we don't need to do anything, and maybe that's why they're like not paying attention, or just have a false sense of security or something?
Yeah, well, like, it's really interesting when you dig into it at the moment, because the reason why the storage is quite low is because they drew down more than they thought they would. There was sort of a wind drought, and they just don't have any flexibility in the system anymore. There's a big difference between like sort of the intermittency of a system completely built around renewables. Like, you can't just tap into your strategic wind reserve. Like, you can't, it's not there when you need it. Whereas people misunderstand when China's looking like it's getting a higher percentage of renewables, more wind, more solar. What's actually happening is they're just dialing down their utilization of their coal, and they can dial that back up whenever they want. So for their actual production and their coal use, most of that's based around coal utilization going from sort of starting a few years ago, going from sort of 60s to down to like, I think it's 30s is what quite a few of the houses are kind of forecasting. But that's, if they need that power, it's all there. They can just dial up the utilization. Whereas the likes of Germany doesn't have that. Germany's just built out pure renewables, and there's a great website everyone should look at, and it's called Electricity Map. And you can just look at the generation profile of the last days, 3 days, week, and you can see where their energy is coming from. What's interesting with Germany is, like, there's all the articles of how fantastic it is that they got 70, 80% of their power on Tuesday. It's Tuesday afternoon, it was all wind. No one talks about the fact that increasingly at points of time, their own coal and gas isn't even covering their energy needs. It's imports as well. They're needing to import to cover the balance. And that's really important, because starters, they used to be a massive energy exporter. Back in 2017, I think they were the largest energy exporter. And this is causing sort of a big fracture in Europe as well, because I've always like referred to Norway as kind of Europe's battery that it just plugged into, and that helps smooth over. But the Norwegians are really unhappy with this, because there was no interconnector between northern Norway and southern Norway. And so when they connected into the European grid, their power prices went through the roof. And so that became a big sort of political issue for them. And in the more immediate term as well, their water level is really low. And obviously Norway's, the majority of its power is hydro as well. So not only have they got this political issue, and there's almost a push to not renew some of the interconnectors into Europe. And the other is that, they're just struggling with their own power production as well. And then coming back to sort of Germany's quandary, it's just the fact that when a lot of their surrounding countries have also been pursuing sort of renewable policies, the overall net generation's been going down, even if capacity has been going up. You've got more capacity with renewables, but you've got less net generation that you can choose when to produce. And that's kind of like anyone, when you look at exports out of Germany, it's just when they produce the wind or solar that's getting pushed across the border. And so that's very different than I need power now at my peak demand in the middle of winter. And so, yeah, I see more issues coming down the pipeline, particularly if that storage they don't start to really outbid the Asians for storage, get storage. They keep reducing the level at which is acceptable. First it was 90, then it was 80. Now it might not even hit 70, and they're sort of saying it'll be fine. But I always wonder if sort of Murphy's Law, if they get a really cold winter when storage is low, yeah, well, it'll be ugly. And they're trying to get off Russian gas at the same time. I honestly think they'll just they'll just rewrite their own rules for getting off Russian gas. But yeah, that's another story completely as well with Russian LNG.
Yeah, for sure. Well, so you just said the key word, right? So Germany put up these floating LNG terminals because I don't think they had any, at least not high capacity ones, when the Nord Stream went down. But so then they put these floating terminals out, and they've been buying a lot of LNG from Qatar. But actually, I think Doomberg pointed out, or somebody, it's like, well, who's the top supplier of LNG to Germany? It's still Russia.
Yep.
And that's, I mean, it's so remarkably stupid. So because basically you take down the pipeline, and as I think even Putin pointed out recently, he's like, there's still a pipe that's functional, at least one, right? Like, so one or two were damaged, but there's still capacity there. Happy to turn it on anytime. Basically,
yeah.
It's turned off by choice, right? Not because the whole thing is gone. And then to basically just say, yeah, no, we'll buy Russian LNG instead. So really all you're saying is nothing changed. We're just paying more for it. It's just so remarkably dumb. It's very hard to understand.
Well, it's just hubris. Like you step back and the gas stuff's dumb, but what was even dumber was the nuclear. Like that's the one, like if you step right back and say like what is completely ideologically driven, like there's argue against like what is a sane argument for why it even happened was, and it's not only Germany, like it was also Taiwan. So both of them exited nuclear in 2025. They're sort of reactor shutdowns, and yeah, Taiwan's obviously already busy trying to sort of reverse that, walk it back. But I haven't really seen much out of Germany, and it's just incredibly stupid. Like if you were doing it in the name of sort of reducing emissions, like nuclear was your cleanest. German nuclear reactors were really well run. They were a massive national asset, and there was almost just like a crowd of people celebrating as they blew up the cooling towers. It's like, yeah, I think you have to have an experience then that is that bad that makes people reverse that their ideology. That's because otherwise, yeah, I thought they would have honestly started to sort of walk it back. There's no sort of pragmatism in the same way that the Asians have sort of immediately started to review their energy mix and refire all their coal reserves. But yeah, the Germans seem to want to be the last ones standing on that hill.
Yeah, I was quite disturbed when I was living in Germany watching them actually demolish the cooling towers, because I'm like, you want to shut it down, you can argue for it. I don't think you can make a rational argument why you should shut it down, but okay. But to destroy it and then celebrate destroying it just felt a bit off, right? And I think history will look back at this moment and say like, hey, that was like peak, I don't know, ideology, I guess. I bought a t-shirt and in German it says Kerngesund, and it's got like a big like, radioactive sign on it, and I bought it, and and I told my wife, right, I want to keep this, because let's just remember, I'm not allowed to wear this out in polite company today, right? Isn't that crazy? Like, it's an energy source that powers like 20% of America's grid, right? So many countries are falling over themselves trying to build as many of these reactors as possible. But in this country, I'm not allowed to wear it. Or if I did wear it, people would give me really weird looking stares, right? So basically, I think, Lovis, you can translate it for me, but it's like, it's a pro-nuclear t-shirt.
Yeah.
So
Yeah,
I still have that faded t-shirt somewhere in a cupboard that I'm going to pull out. I saw yesterday that in the state that I was living in Saxony, that now the AfD in Germany is like getting 42% of the polling at 42%. And this is a party that some friends have told me, hey, if we know anyone that's like voting for them or sympathetic to them, we're thinking of like not talking to them anymore.
Yeah.
So, and then that kind of and Lovis, aren't they they were looking at constitutionally saying that party was illegal, right? But now they're polling at 42%. So I wonder how things are going to look like when the gas does run out, or when things get ugly, like you mentioned. Because then maybe they get more pragmatic.
Well, that's it. Enough pain will force you to be pragmatic. Because that, like, a lot of people get me wrong when they're like, oh, you just bag on renewables. I'm not. Like, take wind or solar. There is a sort of an economic feasibility of where you are geographically. So it's stupid to install solar in Germany or the UK. Like, that's not hard to debate. There's low sunlight hours. I've actually seen an economic model that graphed who was the most beneficial, like the most economically suitable to solar. And unsurprisingly, it's like Middle East, hot countries. Makes all the sense in the world to have solar in the Middle East when they're generally burning their own gas and oil. So offsets what they would use domestically, ready to be exported. It's just a win-win for them. So they should be covering. And another problem is obviously solar takes up a lot of land. So you need a lot of useless land or desert. That's a win. But the fact that the UK and Germany were the two most unsuited, and yet they're the ones pushing it the hardest. I just was reading an article on the UK is kind of priding itself on more and more government backing to keep its wind moving forward. Like, the government just keeps stepping in, and there's an interesting divide going in the world. Like, I've been following it with Australia at the moment is in a really interesting place with it, where there's this whole theory of just tax anything that moves. Like, even if LNG prices go up, you just tax it. Europe's similar. If any energy company makes too much, you jump on to it and tax it into the ground. And I've even seen like comparisons to the likes of Qatar and Norway, and saying, yeah, look, their taxes are even higher. Like, their taxes are sort of 60, 70%. And what they leave out is that both those countries like sort of are co-investing, like they're putting money into it. They're not just extracting. Like Qatar, for example, in the last decade, I think it's invested 80, 100 billion, pulled out in taxes, sort of 400 billion, but it invested, whereas Australia and what UK tried to do with its, or is doing with its oil and gas tax, is just straight extract, and all that happens is the industry sort of throws its hands up, and UK's, it's essentially collapsed. Yeah. Like, why invest under that regime? And the same's happening in Australia, and they're doing it to their own citizens as well, slapping really unreasonable sort of capital gain. They removed the capital gains discount. And so it's like a bigger theme of mine is just to step back and look at the world and say, like, what areas have just been really onerous to economic growth and their own citizens, overtaxing more takers than makers, I guess. And then we're allowing capital flows. A big theme of mine is just, I love like Singapore, Hong Kong. I love the exchanges. I think there's more capital is going to flow through there. There's just, not to get off track, but that's like a big sort of overarching view is I think Asia's going to do really well. And I think countries that have just been kind to capital, not overly taxing it, not overly, like even my income portfolio, it's crazy when you go through who has withholding tax and who doesn't. And the likes of Singapore, 0 withholding tax for dividends paid, and likes of US and Australia, like US is 30%, Australia's like 25 or 30 as well.
Any views on how China's dealing with this whole thing, like in terms of how they're treating capital, but also with managing this Straits of Hormuz crisis? Any views on what this biggest industrial, like the gravity of the industrial world globally, like how are they handling things from your point of view?
And they're handling it well. They obviously went in a very good position with very large stockpiles of pretty much everything. Like whether it's oil, I think they've even got more than the official figures say. Like I know Lewis with Gavcal, they've done work on it and think it's far higher than what was reported and similar. A lot of, because this is what makes some of their industry so interesting is a lot of their take their like fertilizer industry. Like a lot of it's actually locked within China. They're not allowed to export it, and so they've got a lot of sort of internal security. Like the simplest way to look at a lot of what the Chinese do is just put security, energy security, and social security first. Like it's like when you look at their energy policy that way, it makes a lot more sense. Like they're just going to do everything to boost their own energy security, and they've done a fantastic job of that. Just absolutely building out solar, wind, coal plants, like all energy security, and very pragmatic on what they do import if prices get too high. Like with their LNG, they just simply resold it, which was actually what took a lot of the heat out of the first month in March in Asia. Was a lot of that was just resold Chinese LNG because they've got enough pipeline and coal switching capacity that they could just say, no, prices are too high, we're stepping away from the market. So yeah, my take on China is it's well positioned. Granted, they are a massive net energy importer, so if this drags on for a long time, there will be impacts, but they're in a lot better position than the rest of Asia to start with. Yeah, a lot of the likes of Taiwan, South Korea, even Japan. Japan's got decent storage. They're a lot more hand to mouth. And so for me, I continue to love investing in China. I've really kind of built a framework where I want to be really long exchanges as a way to sort of capture a lot of that growth. I love the Hong Kong exchange. I love Singapore exchange. Almost in a sort of a 60-40 type setup. I want to be long the SOEs that, because some of them are just dirt cheap. I've bought a few recently that are, they're trading in a negative EV and they've got a dividend in the 6% range. They're increasing shareholder returns. Like there's been like the whole Chinese reforms around has really been cleaning up the whole sector. Returns have been really good the last 2 years, but most people feel like you're about to get rug pulled. It's generally been sort of a theory of China is every time you go in, they have sort of a spurt of 1 or 2 years of good performance, and then you have a absolute dreadful next 2 years or 3 years. But yeah, I think this time's different. Famous last words. But yeah, see shareholder returns are just increasing across the board. Buybacks are going through the roof. They're really cleaning up the 9-point state party guidelines, state council guidelines. They really cleaned up the IPOs. So the IPOs are a lot cleaner now. Bad companies are delisted a lot quicker. There's a lot more continuous supervision of companies. So a lot more are being delisted for doing dumb stuff. And yeah, I just think no one's paying attention to it. Obviously, US is continuing to suck in all the capital.
Ferg, for these Chinese SOE stocks you're talking about, are they on the Chinese exchanges or on the Hong Kong exchange? Where are they listed?
Some of them are both, which makes it even more interesting because there's just absolute enormous valuation gaps between the two. Chinese National Offshore Oil Corporation is like last time I checked, it was like 50%, maybe even 60% valuation gap between the A-listed shares and the H-listed, the Hong Kong shares. Whole lot of reasons behind why that happens. Tax differences is
which one's higher?
Are the A-listed onshore China. The Hong Kong is always way cheaper. Generally, you're getting at least a 20% discount, if not more. And in the case of the China National Offshore Oil Corporation, they got sanctioned in the US, and so it got dumped by all its US holders, and it drove drove the valuation gap between the two like to a massive extent, and you still collect the dividend. You still collect. It's just
So
they're
it's a
fantastic.
discount if you're a
Yeah, massive discount. Yeah, it's an incredible value.
But is there a mechanism where you think it eventually will reach parity again, or not really?
It's possible if they allow trading in renminbi and CNY of the Hong Kong companies and allow some mechanism that's like there's no plans in the works for it at the moment. There's obviously a big gap between what onshore would pay and their ability to buy Hong Kong. They obviously would get stung quite heavy withholding tax for the dividends going back that way. So at the moment, it's kind of structural. So most of them, like that example is pretty, that's the widest I know of. Most of them, it's only sort of 20% difference, which is just
which
accounted
is
for
still
by
big.
it's still big, but it's accounted for by the withholding tax. But it's no, there's a few that are just absolutely massive. And yeah, as I say, when you combine this with how cheap they are to start with, like like Sinopec Engineering, I think last time I looked at it, that was deeply, deeply negative. So it's just and you collecting an increasing sort of shareholder yield every year, and they started buying back stock. That in my sort of framework, I almost view them as bonds, if you will. So there's kind of the exchanges are how you talk an index. Like I wrote a piece on this where pretty much every exchange, if you put it up against the underlying index, has massively outperformed it over almost every time frame, which is kind of just a beautiful way to play emerging markets and this entire trend. And then the sort of the income generation side is SOEs, energy stocks and chemicals and ag. And I just love that setup for the long term here, and some banks. As I see, we're in a sort of a weakening US dollar scenario for the next decade or two. I think one of the more interesting things I've been really focused on recently is just watching all the yields break out. And Jeffrey Gunluck, who's just sort of the US sort of rates guru with all yield instruments, he's like, you shouldn't be concentrating on anything other than the 2 year, because the 2 year is what the Fed uses for its Fed's fund rate. And it's just, the Fed's fund rate is essentially the 2 year with a few month lag. And that's breaking out, which would suggest, going to have more rate hikes. The US can't afford it, so it'll have to print the difference. And I think that's going to be highly inflationary. And so, I just want to prepare the portfolio for that for the next, I'm talking sort of longer term, next few years.
Could you shed some light or share your perspective on things that starting look a bit crazy? Like I just looked at the Kospi last night, and I had to recheck twice. Like it says it's up 300% in the last 1 year. And then if you look at other countries that are these classical surplus countries, right, like Japan and Germany, these stock indices are just screaming higher, right? And like, for example, with Germany, if you look at a lot of the other metrics, you would think, hey, they're not doing that well. But then when you look at their stock indexes, they're all, like 45 degrees or more to the right. Same with Korea. Like when I talk to some friends that are from Korea, they say, hey, the economy is actually really struggling. So do you think and then when you couple that with sovereign bonds, the yields breaking out, is that a mechanism where maybe people are taking that excess cash or whatever they're making, and instead of recycling that into long-term bonds or even shorter-term bonds, they're just repatriating that and then putting that in their own stocks back home, which maybe it's a bit of like trying to drain a dam through a straw because these market caps are so small?
Yes, I got a few thoughts on that. With starters with Korea, because I actually did this recently in a Ferg's finds, like a sort of email I sent out. Is Korea's returns are largely just SK Hilux and Samsung Electronic. It's like 90% of their returns the last year to date. And I think last year it was like 70% of their returns. And so a lot of that's been driven by the AI trade to start with. And what's actually quite scary is whenever I've kind of given my sort of pitch about how I like emerging markets, people are like, oh, I'll just go and buy a sort of a MSI. I'm like, no, be really careful with that, because 25% of that is just free semiconductor stocks. It's really just TSM 14% of the MSCI EM index. And then something like 6% is SK Hynix, and Samsung Electronics is the rest. Yeah, and when you look at Taiwan, like their market's been ripping, and that's, largely, I think 60-70% of that is TSMC. So be really careful with, like what you're pointing out, is the underlying economy is not doing great. And it's a similar dynamic in the US. Is the AI build out is literally where all the manufacturing boom is. Like the rest of it's negative. Like it's not broad based at all. Like I've seen articles claiming there's sort of a stealth manufacturing boom going on. That's not the case. It's just AI sort of sucking up all the capital, and I continue to think that's really dangerous. There's lots of arguments about why semiconductors are now in a structural bull market. They're cyclical. They'll roll over hard at some point, mate. Yeah, I don't know when, but I want to be on the other side of that. Your point as well of like why these markets ripping. I think Korea, for one, they allowed repatriation of capital tax free. So what if it was invested in their own market? And so you're starting to see those sort of dynamics where any country that has sort of a large investments overseas, they are going to try and attract that capital back to prop up their own currency, their own economy. And Japan's another case. Korea is already doing it. I think a lot of people start to look at Korea as a case study for what they just did. I think Taiwan will probably even consider it. And that is another sort of bear case for the US. Is the US is running, nearly sort of 60-70% sort of net investment position, where it's obviously foreigners own all its assets. And so if for any reason they want to bring capital home, that's going to really weigh on US asset returns. So that's my base case, is they are going to start repatriating more capital in size over time. And that's going to prop up their own markets, which is, why I'm largely a bull on emerging markets. I just have that caveat. If you've got to be really careful of some of these that are running really hot on the AI trade. Like I wouldn't particularly want to jump on Taiwan or South Korea here. If anything, I'd kind of prefer to build an index that's heavy China, heavy Brazil, heavy Singapore, heavy Malaysia, there's a lot of value in emerging markets, and I just don't see the need to have that much exposure to sort of the AI trade in Taiwan and South Korea.
Ferg, the only thing with the AI trade, right? So there's multiple layers, right? But I think, and I'm sure you've thought about this too. Ultimately, I think in this like so-called arms race, right, to build up as many data centers and whatever as possible, the bottleneck is not really the chips and the semiconductors and whatever. If they're going away from copper to optical or all this stuff, at the end it's energy, right? You need electrons to make those things work. So have you, like, that does bolster a bull case for just generally everybody needs a grid that's reliable, and everybody needs to basically build out more grid, right? There's not really any other way to go. Do you factor that in?
Yeah, 100%. I just don't, I'm not that much of an energy bull around US AI in particular, because I think there's too many constraints before we even get to that point. I think the transformers is not talked about enough, and that's the fact that backlog keeps blowing out, combined with gas turbines. That backlog keeps going, keeps getting longer and longer, and the US grid isn't expanding it anywhere near. It's already anemic growth. to make the whole thing work, it was supposed to be growing at sort of 5-6% was the original forecast I saw back in 21, 22, and since then it's averaged like 1.5, maybe 2% growth, and so it's nowhere near where it needs to be, and you've got all these constraints piled on. So yeah, I think a lot of the constraints combined with inflation before even get to the real energy story. Granted, I do have plays on the energy story and do have some US thermal coal exposure, because I always figured that push comes to shove, the data centers will just use the greener energy and they'll fire up some coal plants. That's just an easy fix. And we're actually seeing that in the data already. US coal generation increased for the first time in like a decade. And so that's starting to pick up. So that's an easy way to play it via domestic coal. But for the rest of it, and anything that is actually promising, like everyone just piles on as well. Like you had like the Bloom energy, like anything that could actually work, it just gets bid to like astronomical levels. So for me, it's not really that interesting to get involved there. I don't know why everyone's looking past like the constraint side of it. A guy that I love his work is Craig Tyndall, and he kind of thinks it's going to hit the wall like early next year. Like the constraints just gets too large, and it is honestly not even just so I tried to work out like a sort of what were the heaviest constraints, and the ones that I came to were, first is transformers. The US can't actually can't really debottleneck that very effectively, because so much of the electrical steel, there's grain orientated steel and there's non-grain orientated steel that's needed in transformers. It's all produced in China. This is like an old story. Like I think 60% is produced in China and 50%. And so and then to upgrade the plants to allow them to make more, all that manufacturing equipment is in China. So it's wherever you find the bottleneck, you often find the way to fix the bottleneck is also sourced in China. Like they need the manufacturing equipment. Like a side note on that was the US trying to become more independent with its rare earth supply chain. So they were leaning on Malaysia, and Malaysia had kind of agreed to some of it. And then as soon as they sort of started to implement it, China just was like, okay, well, if you're going to side with the US on this, then we won't supply you any of the equipment or any of the know-how you need with this. And we just seen that over and over again. Yes. So for me, I just want to be on the right side of constraints. Like I want to be long stuff that I see having long drawn out constraints, and I've gone over a lot of that. I see just constraints for years in the likes of uranium, the likes of PGMs, the likes of even coal, tin. Like I love being long those metals, because I can see just the constraints stacked up, and I want to avoid anything that's valuation is going to be hindered by these constraints that I see keep stacking up, which almost comes right back to the start of our conversation. Like, why is no one sort of realizing the constraints in the system? And I don't know, but I just know that they will matter at some time. And so making good money on the commodity side of the constraints, and just staying away from anything I don't understand why it's not factoring in the impact constraints will have in the future.
I think that's really wise if you have the patience.
Yeah.
It's often the hardest part. Yeah, I get
That
it.
is honestly, yeah, patience is everything in this game. Yeah. And often it pays just to have a long time frame going into something. It's like over all my trading, I've always known that I generally, when I invest in something, I'll be frustrated for a year. I might see it start to work in year 2 or 3, and then I make all my money in year 3 to 5. That's just how it works. And it's, if it works sooner, it's because I got really lucky. Like I had one where I really loaded up on coal, and then like the Russian invasion happened, and got patted on the back for how I nailed the call. No, I didn't see the Russian invasion happening at all. That was just absolute pure luck that turbocharged the thesis.
Well, so it was quite funny because we had Rick Rule on telling us about, this was before Iran started. He was saying, you know, gold, silver is great, but he's like, right now the value is in oil and gas. And he's saying, it's an industry that underinvests like $1 billion a day or something. It's just, it's been so hated. There's so many restrictions. They're being taxed, like you said earlier, everywhere. Massive underinvestment. And then, so he loaded up, and then he actually recently was like, Iran, of course, like accelerated the thesis, but he's actually a bit pissed because he's like, that. It's like, now I don't really know how to factor it because it's kind of skewed the whole picture. Now I need to like worry about all these other factors rather than just the clean story.
Yeah. No, I
Definitely
similar in that. I still continue to think with some heavy oil services, which is a play on what you touched on to start with, is this consistent underinvestment in the space. And I firmly believe that, well, while everyone might be, even now, sort of CapEx continues to pick up, but a lot of people sort of worried that there is going to be somewhat of a spending freeze. I continue to think that that will be the place to be longer term. And that's kind of reminiscent of the 70s. Like if you looked at the two best performers for that decade were gold miners and oil services were the two places that just absolutely killed it. And that I kind of see, that setup is likely to repeat to an extent. Both of them just have, and as gold miners have already run, it makes sense to me that oil services are probably the more attractive buy here. And my last piece was buying an oil service company.
How are you looking at gold at the moment? Because when we met last time, you were saying that you think gold might make a run. And I think it's done a bit of a run, and then now it's, pulled back during. Okay, the question's twofold. Like, why do you think it's pulled back with geopolitical issues, large on everyone's screen? When, I think most people would have expected it to accelerate to the upside. And then where do you see things going from here?
Yeah, well, for me with gold, obviously a lot of countries have needed liquidity to buy energy and buy food. And so gold was something that had obviously run and was an easy target. I think like we'll look back and understand that a lot of the Gulf countries probably liquidating some of theirs to get liquidity needs. I know Turkey was doing it. I know Poland was considering doing it for funding their defense requirements. My like big framework with gold is when anything has a big run, you have a curve which more and more sort of tourists are jumping on, and once it's run hard enough, you'll have a period where the tourists essentially give up and leave it. So you get that little pullback, then you get sideways chop, and then you get the next leg up in the bull market. And that's where I think gold is. We're currently in that sideways chop for a period. It won't do too much because at the moment there's probably more sort of net sellers for a period because they've got more urgent needs in purchasing their sort of energy and food and other commodity requirements in this time. And then, ultimately, I think it's gold's in a bull market. I still hold my positions and have no intention to sell mine. With gold, I still usually defer to, I like PGMs better. I have a gold position that I plan to hold for years just because I think there's a chance gold could go somewhere really crazy. There's a chance gold could go somewhere astronomical. And so I always want to have decent exposure to that, mainly via sort of a basket of junior miners. But for where I like actually picking companies and playing it for the longer term is PGMs, just because I track the supply side a lot closer because it's really only 4 companies you have to track, and all of them are disappointing, producing guidance, missing their production targets. I love that space. And anyone that's known the history of that knows that when that starts to trend and run, it'll do so for a long, long time. So I think I've got nearly a quarter of my portfolio between PGMs and gold. Yeah, maybe a bit less at the moment because it's pulled back a bit. Yeah.
I remember you mentioning PGMs a year ago. you're still waiting for the big move, or some of it already happened, or where is it at?
So there
Was
was definitely
rhodium, right? Rhodium, you were telling us about how you were going into the weeds to find out how you could get exposure to rhodium.
yeah, so I bought a lot. So I got probably like, I think at cost base, I bought like 5% of my net worth is in physical rhodium. That was like whatever 2 years ago. Uh, yeah, that's worked well. Same with platinum, that's worked well. So how I structured the trade was sort of 5% of my assets in physical rhodium, 5% in physical platinum, and then I bought a big position in Valterra, knowing that those physical positions would hedge. I hate buying miners in South Africa and Africa in general. I don't sleep very well knowing that might wake up and they've done something crazy. But having really heavy physical positions would kind of hedge me, because with rhodium in particular, I believe it's pretty much 90% is mined within South Africa itself. And so if they were to do some sort of crazy policy, then I'd make out like a bandit on the physical, even if I'd lose on the company side. And so, yeah, overall, that whole trade's worked really well for anyone. It's been following, sort of look at the platinum chart's probably the easiest to follow. And again, this also ties back to China, so similar to what's been happening with gold and silver, which no one really talks about anymore, which kind of fascinates me. But there's still just a slight premium in gold and silver on the Chinese market in Shanghai. And so it just continues draining physical across the border. And that's, yeah, it's gonna have more volatility in the Western side, because there's a lot of leverage, a lot of paper in the likes of the COMEX. But yeah, if the physical keeps getting pulled across, then the Chinese will increasingly be able to set the price. The same's happening with platinum. The Chinese have actually, I think they've largely cornered the above ground inventory, which is there's no writing about it. The one guy that was writing about it and was an absolute expert on it, he unfortunately passed away at the end of 2024. He was the only guy that was really doing great work on it. And he's been in PGMs his whole life. David Davis, everyone can look his work up. It was fantastic, and I got a lot of insight from his stuff. Yeah, needless to say, I think the whole complex is going a lot higher. I think gold's probably going to take a breather for a period, and then it'll start the next leg up. And I'm not smart enough to pick when it's bottom, so I'm just holding.
Yeah, to round out like weird metals, uranium is becoming almost like I don't know. It used to be, I mean, we've talked about Germany and all that stuff, but I think in the larger picture, I know Jason's told me about and made me invest in uranium stocks already 7 years ago, and they've run and then they don't, and then they run and they don't. But it's very choppy, right?
Yeah.
Do you think there's still a bigger story there, or is it mostly over? Because I feel like it's becoming more mainstream now.
So what's happening in uranium is fascinating, because the story's more airtight, like the actual underlying macro story, and yet the miners are an absolute mess. So the miners have been a complete disaster across the board. You have made money, and like I've done well out of it, but it's been such a frustrating area to be in. So you've got a lot that have just constantly disappointed with their ramp. So trying to bring uranium into production is really tough. And so, and over half of the uranium tried to being brought on at the moment is ISR. And there's just been multiple disappointments across the board there. So that's across the whole mining space. It's just been an absolute minefield. There's been just so many disasters, blow-ups, and the ones that have done well haven't actually done well on producing. You got some of the US names that have done fantastically well. They completely disappointed on the production side. They just got great marketing teams. They managed to tap into critical metal side. They managed to play the narrative well and have great nameplate capacity, but they haven't actually produced anything. And so it's super frustrating. The way I've come at it is I've bought a large position in physical. I think you can't go wrong with having heavy positions in either Sprott Physical Uranium Trust or Yellowcake. Both of them are fine. And then I've gone out to conventional greenfield, which are pretty much like ready to nearly at like have secured their finance and are almost ready to kick off. Like a good example, probably my favorite's Bannerman. It's got a JV with the Chinese, massive resource in Namibia in Africa, got a whole lot of tiers so that it can keep expanding its resource over time. Some people hated the deal, the JV with the Chinese, but I felt like that means they won't be hostage to trying to raise in what could be quite a tricky market. And yeah, from there, I just step back. I don't want to own any uranium producers. A lot of them have heavily overcontracted in a market that will be very unfavorable to them moving forward. I see the whole sort of pricing regime shifting in uranium. I think it'll go from sort of floors at the moment in the sort of 80s ceilings on the sort of 120s. I think the whole thing will shift up to sort of floors, at least in the 120s, and ceilings in the sort of 180, 200. And so the company's stuck with all those fixed contracts and having overcontracted their book, they won't be very well positioned. And the guys that are just bringing on greenfield mines, they'll be really well positioned. I think a lot of the ISR names will continue to disappoint is kind of, yeah. So that's how I'm playing the sector. It's, it's tough though. There's been an awful lot of heartache from trying to invest well in uranium miners.
Can you just to dig a little bit deeper, right? ISR is in situ. It's like a leaching process, right?
Yep. Which is it's quite similar to fracking. Like has kind of like almost a similar increase in decline curve. It's just obviously pumping sulfuric acid into the ground and extracting it, which is an interesting angle as well with what we're seeing with sulfuric acid and sulfur out of the strait. Like that's got implications for them as well, the ISR miners globally. But yeah, the biggest by a mile is Cazetta Prom, and they've just been having cost increase for years. The whole bear case across uranium was that they were going to massively ramp production at a low cost and sort of kill the market, and that hasn't happened. If anything, they've constantly missed their subsoil use agreements, and their costs have constantly gone up since I've started tracking them, and their cash costs are up over 100% in like, what's that, 3 years, 4 years?
Yeah. I mean, yeah, the reason I asked was because I follow Craig Tyndale as well. And when I see like the number of things that he's talking about that we're going to hit shortages with, and then if I don't know the specific chemistry and metallurgy, right, for all the different mining processes. So I'm always so worried, like if I think underlying thing will go up, like the underlying commodity will go up, I'm at the moment hesitant to buy a mining company because I'm not sure if they've got everything they need to bring that product to market, right? Like another company that I thought was interesting was Mosaic, the fertilizer company in the US.
Yeah.
And I thought, so cool, this company, they're going to be well positioned. They don't need Qatari LNG. They'll be making out like a bandit, to borrow your term. And then I talked to AI about that company, and then they go, yeah, but be careful because they need things, I think, like sulfuric acid, right, which is getting hit. And when you look at that company now, their stock's tanking because they've got a shortage in their supply chain that they need to bring their final product to market. So I'm feeling more like what you said. When I look at my uranium portfolio now, it's mostly just Sprott, right? The physical trust. Just because I feel like I'm definitely not smart enough to navigate the way things are playing out. So do you think that's maybe also going to be a trend with other commodities like copper and silver, even gold? Like the physical might be the way to go, or platinum versus the mining companies?
Yeah. First thing to observe is like when you go back to the 2000s, there was a period that you wanted to own miners when there was a perception that they were going to have nice fat margins out into the future. I've got an amazing chart that shows I think it's from 2005 to maybe 2010. And it's just as there was a point at which their margins were the fattest before cost inflation really took off. Obviously, energy was a big part of that, and that's what we're seeing now. And that really squeezed their margins, and you were better off you would have had a smoother ride in the physical commodity itself, as that kept going up with all the constraints. And yet, you obviously had a far rougher time in the miners because all their margins were getting squeezed by cost inflation, all the inputs, and by a lot of what I think we'll see this time around is like just lower grades. So you need more energy, need more inputs to extract to get less. Like I see this in PGMs. I've got a great chart there where the costs are just going up in a linear fashion, and it's kind of interesting that we've seen prices run sort of in the ramp sort of 100%. The production hasn't really reacted at all. If anything, it was they sort of needed that to get themselves out of the hole, and they're still not sort of throwing capex at new mines and really ramping. I think the entire commodity complex has had such a rough time, and all the capital's been drained for more popular stuff like the whole sort of AI tech trend. It's still quite capital scarce, which comes back to what I was talking about. If you can find companies that actually have quite secure finance, like a sort of a Chinese JV, it's actually really attractive, I think.
Ferg, I know you have a keen interest in China, and I know you're incredibly well informed, but I don't think you've been in China. Have you been to China, or have you been recently?
I've been to China, but only as a stopover. No, I can't say I've done I want to take the family and do a full road trip through. Similar to what Jason's doing now. Like, I'm envious.
Yeah, highly recommend. So Jason and I went last year for 2 weeks. He took me around. We visited like 10 cities in 12 days or something like that. It was super, super fun. And now he's there with his family. So I would love to have you ask him a couple of questions if you're curious.
Yeah, please. Yeah.
So fire away.
Yeah, I just started how easy is it to get in now? Because I know a lot of people have had issues with visas. Like a lot of my wife's friends from Montenegro, they all loved it, but then they ran into visa issues to get in. So how easy was it to get in? How easy is it to get about? And is it very welcoming essentially? Because I know like you can't just stroll in there with your iPhone and your Western card and it's just easy, or am I wrong?
Actually, a lot's changed in the last 2-3 years, I think. So if you download the Alipay International app, right, out of Hong Kong, they've got a SIM card, an eSIM that you can just download in the app. It's pretty cheap. I pay, I think, maybe 30 Aussie dollars, I want to say, for a month, and you get 2 gigs a day, right?
Okay.
And if you use this SIM card, you get access to everything, your WhatsApp, your Twitter. So whenever I'm wanting to jump on Twitter, I just switch to my eSIM. For everything else with local stuff, I use the Chinese SIM card. But for you, if you're doing a trip that's less than 30 days, you don't need to apply for a visa. I don't think you have to check for Montenegro. I'm not sure, but I think for Australia, New Zealand, 30 days visa free. My friends just came over from Melbourne. It was no hassles at all. And if you want to extend the trip longer than 30 days, you've got a few options, right? You could just jump over to Hong Kong or to Korea or to Taiwan or to Japan, but Hong Kong's the easiest. From Shenzhen, you can just take a bus across. Me and Lovis did that. And then it resets again. Like I even asked the customs lady when we were coming back in a bit cheekily, like thinking like I'm gonna get scolded, right? I said, hey, so if my 30 days run out, can I just jump back over to Hong Kong and come back again? She's like, yeah, that's how it works, you know. She's looking at me like I'm dumb as a yeah. So anyway, it's really easy. And welcoming wise, people here are extremely, extremely warm to foreigners, especially Western European people, because they're just so curious. They want to talk to you. They want to know how life is on the other side. The number of times I've been walking down the street and people ask me super politely, "Hey, would your kid like some sweets? I bought some for my grandkids. Would your kids like some? Or can I take a picture with them so that I can send it back home?" Just really, yeah, really. I mean, Lovis saw everything firsthand, right? So
It was,
I really enjoy it here.
I mean,
So just check
so
the visa for Montenegro. I'm not sure,
Yeah.
but should be easy.
yeah, I mean, so obviously having Jason with me it was a game changer since he does speak Mandarin. He says not very well, but I think he speaks it actually quite well. But there is, so I went once for 10 days or so in 2017, and it was such a pain in the ass to do anything. And that is like completely resolved. Like with the kind of a little bit clunky Alipay app, but once you figure out how to navigate it, like anything from booking flights, hotels, the high-speed rail, ordering food, like everything works out of that app somehow. And you can use your Western credit card in there for payment super easily. I don't know, just everything seemed to just work. Like it's insane. Like you book the train, the high-speed rail, you show up to a train terminal that's bigger than most airports I've seen. Like even a huge airport in Germany, it's like this train station I think is bigger. Like it's insane. And then they don't let you in unless you have a ticket, which I'm like, that's like such a no-brainer idea, but it's also not integrated anywhere, I feel like. So you usually have train stations like a bunch of riffraff, it's like always
Yeah.
dirty and weird. Not there. Like it's like clean and like well kept and tons of people. I mean, everything there is built for just handling tens of thousands of people. So it's insane infrastructure. Well, so anyway, then you get to go down on the platform where the train shows up about 10 minutes or maybe 5 to 10 minutes before it shows up. They let you down, and then the train pulls up, and like it's so precise that like they mark where the door is, where your door is going to be relative to your seat. They mark that on the platform, and the train pulls up within like 3 centimeters of it, which I just know the German train system. They will have a plan, like a printed plan somewhere that nobody knows where. And you try to find is like, oh, where's my car going to be? But then as the train comes in, they do an announcement saying, oh, sorry, our technology's messed up, train's coming in backwards. So that everybody's like running to the other side of the platform. It's like, let alone being able to pull up within like a marked line. Like it's like just, I mean, these are small things, but the thing, I'm an engineer. The control you have to have over your processes, over your schedules, over everything. That is not a simple feat. Like somebody might say, it's like, oh yeah, well, the train shows up on time, like no big deal. Like, no, it's a big deal. It's a huge deal. It's very, very, very hard to do that. Because if it was easy, a country like Germany would certainly be able to do it consistently, and they somehow cannot anymore. Yeah, I mean, I get really excited. We had an absolute blast in China. People are friendly. There is a language barrier, but there are also more and more younger people speaking English, and they might be a little shy, but if you encourage them, like you can have super interesting, deep philosophical conversations with them. Like I was also shocked by just like the quality of conversations we had with random people, because I'm like, man, to get to this level with somebody I meet here, I'm like, you'd have to be like friends for 3 years before you breach the subject.
Yep.
They just seem to be. It felt to me like they're just more steeped in like philosophy or just like deep thought. But maybe it was also maybe it's just a bias, and maybe it was just the places we were. Or I don't know. It's hard to explain. But I mean, highly encouraged to go. And like, there's basically no crime. All the delivery drivers leave their keys in their mopeds and their cars when they when they run out to deliver food and stuff. And we even asked them, I was like, yeah, so is it safe? And they're just like, oh, there's absolutely no point in committing a crime because it's going to be, you're going to get caught, right? Like, and it's not just like, oh yeah, surveillance state, whatever, but that, yes, there is that aspect, but it's also culturally, they just don't tolerate it. It's like, yeah, somebody else will see it. Like they phone it in immediately. There's no, there's like no leniency, you know. So it's insane. Like you could, if you had 8 bags, right, and you're the only one carrying them, you could literally bring them down from your hotel room one by one, line them up on the street, and probably somebody would just stop and watch them for you while you you know, like yeah.
So crazy. Like as you're describing that, I'm just thinking how like I've got a friend in London and he works in the hedge fund. He's like sending me like a video of some guy running past the front of his office, just chasing someone with a machete. I'm just like how is like this the divergence we're seeing? Like this is absurd.
It's completely absurd.
Yeah.
And then, I mean, a point that Louis Gave makes really well, right? Like if you had to find the one mispriced thing in the world, he's like, it would probably be the Chinese renminbi. Dude, you'll be shocked how cheap it is. I think even compared to Bali. And I think Bali, I don't know, I haven't been, but I think Bali is not a very expensive place, I don't think. But it's like just absolutely preposterous. Like the hour-long taxi rides for like a few bucks, but like also just food, like incredibly high quality food. Like they don't even offer you rice or noodles, you know. At the end, it's like, "You still hungry? You want some rice?" And it's almost like a slap in the face if you say yes. It's just all
it's
all
protein
and meat.
It's all protein, yeah.
Insane.
You know what? I think Lewis, because that was one of the things that piqued my interest, was Lewis was like rattling off prices, and he was rattling off like the Four Seasons was like, I don't know, like $100 or $200 or something. And I know, like,
yeah, we did it.
Took my wife for the birthday. Yeah, and this side of the world, like it's a lot more expensive, I can tell you that. Yeah, so that's absurd value.
There's tons of competition, like there, and what's also what was super interesting to me, there are all the fancy American and European brand hotels. They're all there in every city, because like, you know, the smallest city we visited was, what was it, Jason? It was Foshan, right, next to Shenzhen, and that's like 4 million people. And there's like I don't know. I even forget which one we stayed at, but there's like a Steigenberger hotel next to a Four Seasons, next to whatever. There's so much competition that you get like 5-star hotels for, depending on which town you're in, between $80 to maybe $150 a night. But that will be the high side. And it's really good. Like it's also not. People say, "Oh, it's just a front on the inside. Everything's shit." Like absolutely not. Like it's just not true. It's probably better than if you go to the one here, because the people working there actually give a shit. And they're like so polite and want you to have a good experience, because they know that you can just go across the street and have a different one. So anyway.
No, you've sold me. I'm going to have to get a itinerary to take my.
Yeah, Ferg, another thing I thought you'd be interested in, right? Like, so I would actually like to stay here longer. And I did some research on what it would be like to get a visa here, start a consulting firm, right? And then get the visa that way. And then I looked a little bit at their tax rules. And you know, it's crazy, or maybe you tell me if it's crazy or not, but if any profits for a small enterprise, right? That means anything that's less than 3 million RMB a year is taxed at 5%, right? Which to me, it's like, it's super good, you know? And then on top of that, whatever's above 3 million, I think then you're at a 20% rate. And when I look at Singapore, I think they're super competitive globally, right? And they're at 16 or 17, I want to say. And then when you think about how cheap everything is, so when I take a train to go to the other side of the, you know, like a 15-minute train ride, a metro train ride, it's 2 RMB, right? So things are so cheap that you don't think about the price, you just think about what's more convenient. So people take the train or the taxi depending on which one's faster. Because that same taxi would cost you 10 RMB, which is 5 times more, but it's still just $1.50 for a 15-minute ride, right?
Yeah. Well, I remember Louis Gave saying, I think it was him that said it was like it's almost a rule of thumb for how good a society is doing is the quality of people you see riding like the trains. And there's lots of pictures in China of like the CEO of BYD being spotted on the train on the way to work. Yeah, like that sort of stuff. Like it's ties into what you're saying in that it's efficient, it's cheap, it's safe. Compare that to like some of videos coming out of like the New York subway or something.
So yeah, I'd highly recommend
sure.
you just come and see it, because it's not, I think it's, it's enjoyable and it's interesting, but also you come here and then you realize a little bit about how the world's actually working. Like you come here and then you start to think, oh, now I know why every bottleneck finds its place in China, right? Because this place is so efficient and so cheap, right? That, yeah, obviously things start to gravitate here, right? Because they don't really think about this problem's too complicated, I don't want to do it. They think, because they're so entrepreneurial, they go, oh, because it's complicated, it means we can do it and then we'll build ourselves a moat. So let's do it, right?
Yeah. You kicked, like when we met, when we were in Bali and we had lunch, Jason, you kicked off like a whole, like that. I think we had one conversation that you were like, yeah, the Chinese don't really just view software as its own kind of like value add. Like they're just constant engineering. How do I bring costs down? How do I make it cheaper? How do I kind of add more value for less? Like it's such a different mindset. And once you pointed that out, and I have another friend that pointed out, she's like, there's something almost deranged by the Chinese entrepreneurs where they just attack profit margins. They attack their margins. And even if they clean out their own entire industry and it's just their company left, they'll keep attacking their margins. Like there's no point at which they ever kind of expand margins just for the sake of it. Like they've got a completely different take on it to the West. And so there's this kind of, whereas there's almost like the Western mindset's putting software margins up on sort of a pedestal. And I think a lot of that comes from China. Like there was obviously not a lot of respect for intellectual property and a lot of like piracy. So there's just an assumption that it's all will get stolen and move around. So there was this real hard focus on just, as you say, engineering the hard problems, solving the hard problems. And it's just showing up everywhere.
I think they appreciate scarcity, right? So, I mean, yes and no, because of course they're also the masters of mass production. But I think they believe a lot in just like, if you want to be an entrepreneur, I think not so many of them dream of just sitting somewhere in a coffee shop with a laptop and that being the thing they do. But they're like, no, I want to build a factory. I want to own a factory, right? They think very much, I think, in these real terms, because they realize it's much harder to get the money together to put machines in a factory and train workers to make the thing. And then you're going to try to drive down the margins as much as you can to make as many as you can to corner the market and do all that. Even if that goes south, you still have the machines. You can retool, do something else. Like I don't know. I think it's a mindset thing in a way that they just like the physical assets.
It makes sense. Like it's more.
Sorry. I just want to say philosophically, right? Maybe there's something there where when you said they just see profit margins and then they just attack it, right?
Yeah.
I think for us that's so hard to comprehend. Like, why would you do that to yourself, right? But for them, when I'm rubbing shoulders with them and I'm hearing how they speak and how they think about it, they go, hey, it doesn't matter, because if I do that, I get a bigger, let's say, customer base, audience, my abilities start to stack up. And then when and if the time comes that I need to pivot, all these people that I know, all these skills that I've learned, all the things that I've collected along the way, that will help me make the jump to whatever needs to be done next. Because if you have a long enough timeline, nobody holds the monopoly forever, right? So for them, they're like, I mean, it would be good if I build a monopoly, but I don't think that's going to happen because we're going to be competed away. So the main thing to do is build cash flow, in a sense, like build my market share. And then all that leverage I get, all that soft leverage, right? The relationships, the know-how, I get to keep that. And then that follows me for the rest of my career. And I think that's why they don't respect the margins as much as the people in the West do, because I think the end point of a Western entrepreneur oftentimes, especially in the last 20 years, I think, was, hey, start up, ramp up, exit, right? But for them, they don't really think about it in terms of exit. They're like, but if I exit, then what do I do next? Why exit? And it's not about the money anymore, because I'm talking to these guys that are like worth hundreds and hundreds of millions, and they're still super excited to go to the factory and work with the young engineer to figure out what's the next innovation on the factory line itself, you know? So it's super different, and yeah, it gives me a lot of different perspectives on how the world's moving.
You want to be long that. You want to be long that sort of level of innovation. Whereas there's a book I always recommend everyone reads. It's The Myth of Capitalism. It's a bit old now, but it's just, this book was written on the US, and it was just how so many of the sectors are just essentially versions of oligopolies, duopolies, regulatory moats, regulatory capture. And once you read that book and you see the charts were the ones that stuck with me. They're those big consolidation charts where you start off with like 100 companies and you end up with like four companies that happen across the whole food processing in the US, happen across banks, railroads, airlines, across all the media. And once you see that and you understand that it's the opposite of what you're describing, like that drive to innovate, to, like, granted, there's pockets of fantastic innovation in the US, like in tech, but tech's only like one sector. Like, you've got all the stuff that needs to be produced, and that's where I think like there's like building AI versus like deploying AI, and I think the Chinese are massively winning in like deploying the stuff, put it all into robots, to factories, to creating stuff. Like, whereas an awful lot of Western companies are almost like rappers, they're almost like drop shippers, have a nice fancy brands, and the whole back end is in China. And all those Chinese need to do is learn to create their own sort of marketing front. And yeah, the Western brand's left with nothing because it doesn't actually know how to manufacture, it doesn't know how to innovate, doesn't know how to. Yeah.
Yeah, it's for sure super interesting. But I mean, I know you're not somebody who's like ever intimidated with, with others' thoughts on something, because I know the work that you do, you're used to talking about stuff that's hated.
Yeah.
But just the level of disbelief I get even when I tell people about China, because everybody's just so convinced, and has been for so many years, that they're just like evil and bad and this and that and the other thing, and it's all fake, right? The collapse is imminent. Like, there's these whole like China collapse theorists, and it just actually, when you go, not only is it not collapsing, I think they're still accelerating. Like, they're not even near the peak yet. It's hard to, it really boggles the mind when you come from another place. I mean, you do live in Asia, so it might be less crass for you, but me,
I see it here. Yeah. I see it every day with, like, I'll go with my son and my wife, and it's half an hour to a coffee shop, and there will be BYDs all up and down the street. All the taxis are now BYDs. You'll see posters here now with the finance packages for them, like 3 years interest free. I often throw in like a sort of a tablet, and
well,
like
they only cost like a half of another car, right? They're already cheap.
Alto One, I saw an advert coming from the airport that was equivalent of, it would have been like eight or 9,000 US. Your brand new BYD, yeah, 3 years finance. It's like, I think a lot of Westerners are blind to those finance packages because we got so used to, like, the whole interest free, like 24 months interest free. That's really unusual in this part of the world, to not have to pay anything for that long. Interesting charts, just looking at the yield on like the Chinese 10-year versus the US 10-year. It's like half. They've got so much cheaper cost of capital.
Hey Ferg, we've kept you like a lot longer than an hour that we said, so I'm sure you've got tons of cool stuff to do on Bali and a nice Friday morning. So maybe we'll keep it for another time when we can connect again.
Yeah, always love to chat.
But before you go, can you tell people about what you're doing on Substack? Because it's one of the few publications that I subscribe to and pay for. So I really enjoy reading your writings, but maybe it'd be better to hear it from you. Like, what are you busy with on Substack?
So my Substack's essentially just what I'm doing with my portfolio, like the simplest level. It's just how I'm viewing the world and what I'm kind of investing in. I write one email a week that I'm just put out. Favorite thing I've read, the favorite podcast, quote, chart, and something I'm pondering. What I'm working on at the moment is a income portfolio for my parents and my son. So this is a portfolio that I kind of just wanted to put it like sort of a 60-40 for the next decade, something that'll spit out dividends, is very well positioned for inflation, a lot of quality businesses. Like I love the exchange operator business. It's very heavy. I think 40% of the portfolios in exchange operators, and they also pay quite high dividend yields, and quite a few of them are also buying back stock. And that's my latest piece that I've been putting a lot of work into, and where I'm parking my parents' money and also building a fund for Hugo that he'll tap into later in his life. Yeah, after hopefully it's compounded for, what's he now, 3? So let it compound for another decade or 2.
Very cool. And so if I'm a subscriber, I can see what you do there.
Yeah. I have like the basic tier, which is just all my sort of what I'm doing, my portfolio, all my pieces. Then I do have a pro tier, which is my I do sort of a 1-2 hour AMA when I just answer in depth everyone's questions for a session once a month. And I have my once a month session when I sit down with my mentor who runs a hedge fund and just sort of pick his brain for an hour on everything I'm struggling with, or where he's seen the most opportunity. And we often just red team each other or debate what some of the best positions are. And so, that's the other tier.
And for example, the sectors that you mentioned, you go into individual names as well, right? Like when you talked about the SOEs in China, for example, the average person, I think, listening in might not know how to get access to those names. So with your publication, you'd be able to tell them, hey, you can buy this in Hong Kong, for example, right?
Yeah. No, I go for it, and I try and ETFs as well occasionally. I'm like, if I didn't want to get deeply into this and buy all these individual companies, this would be the best proxy. So I do that occasionally as well. I just try and, obviously I love picking stocks. Occasionally, if there is a nice passive way of catching it, I definitely touch on that as well.
All right. So we'll let you go for now. We're gonna come and bother you again in a few months to come and pick your brains if you still have time for us.
No, always have time. Yeah, love chatting with you both. Yeah.
All right.
Thanks so much, Ferg. Enjoy your...
Cheers. Have a good day. Have a good morning, Jason. A good evening, Lois.
And that wraps up our main conversation. But we're not done yet. We're going into overtime, where Jason and I unpack some insights, reflect on what just happened, and connect a few dots. And go.
Anybody is still listening to this, subscribe to Ferg's Finds, right? It's so good. He goes so deep in everything. It's data driven. Plus, then he puts a layer of very high critical thought over the data. So, he's somebody I really look forward to reading.
Yeah, I agree. Every time it's worth it. And he writes both very informative but also entertaining style. And I'm pretty sure I'm a paying subscriber, not on his highest tier, but on his normal paid tier. It's been very insightful. But I have to admit, I need to, because like this income portfolio was talking about, I need to really look into that, because that's actually kind of exactly what I'm looking for as well. Set some money aside for the kids and also for like aging parents. That kind of piqued my interest. I gotta look through the archives, because I'm pretty sure I have access anyway. But yeah, I think his view is like always very crystal clear, in a sense. I think it's because he does a lot of writing. So I think the people who not just invest money but also write about it, it's like a forcing function. It helps you crystallize your thought, right? So I think that's why he's also such a awesome guest to have on, because he can articulate his views so well.
Yep. I guess you stress test a lot of your of your thoughts and your intentions through the writing, right? And once the writing's done, you got something to stand behind.
Yeah. Yeah, I mean, you do that too, right? You often write thought pieces, not so much on investments, but just like geopolitics or things that you see. I think that really contributes a lot.
Yeah, it's weird. For me, the writing is almost like something I use to help me figure out stuff. When I feel like there's too much going on and too many balls in the air, so to speak, then the writing helps me to organize my thoughts.
Yeah. Yeah, I don't think I use it enough, honestly. Every time I talk about this, I know how beneficial it is to crystallize the thoughts, and unfortunately, I feel like I don't take advantage of it enough myself as a practice. But yeah. What's like something that stood out to you? Or is there something that he said that surprised you, maybe in his view of markets or where things are going?
Not really. Nothing that kind of conflicted with my own views, but more a reminder to two things, like a reminder to go deep, right? To really understand what you're investing in. And then a reminder to be patient. And I think maybe the third reminder would be don't go too heavy, right? Because, he said he was laughing about it, saying he was 5% in rhodium. I know when I get excited about something, like I could easily go much bigger than 5%. So for him, overweight's at 5%, and for me, overweight is.
Is margin buying 200%?
I'll keep the conversation PG-13.
Right. No, I know what you mean for sure. Yeah, and the patience part is key. I mean, it's always a bit of a conundrum, right? Because on one hand, if you don't have that much money, you try to get there quickly, and so you can get way overzealous and get over your skis, and then you actually end up losing money. And then it's like, yeah, but you managed a lot more money, so like it's easier to be patient. And it's like, well, actually, it's not, right? It's like a catch-22. You have to learn the patience, otherwise you'll never turn your small money into big money. But also you otherwise will never be able to hold on to the big money either, right? So it's a bit counterintuitive to think about when you're not like I don't know, when you're not an investor or a trader to begin with.
How about for you? What stood out for you with this call?
Yeah, I mean, lots of things. It took like 3 pages of notes, but generally I'm impressed how closely he's tracking a lot of this stuff, like that Europe is at record low LNG levels. I would have guessed it, but I couldn't personally be bothered to check. I didn't know that the Asians are outbidding the Europeans. That just seems like, I don't even know. I mean, so on LNG specifically, that seems like just crazy to me. I read his piece on the exchanges that he kept bringing up. He's like, yeah, exchange operators are actually quite good investments, and that is super interesting. Basically, you can buy the company that is say like the New York Stock Exchange is a business that is also listed, right? Or like NASDAQ is a company that you can also own shares of. And so that's, I think, what he's talking about when he's talking about owning the exchanges. And they are typically quite profitable, which makes sense because they get a small cut off of every transaction that happens in their marketplace. So that wasn't a surprise. I had read his piece on that before, but it's good to hear that even several months later, he's still like, no, that's a real thing, and that's actually going to be in my income portfolio for my kids and my parents. Like that's a huge vote of confidence, right? And then, I mean, I know you guys talked about a little bit the SOEs. What is an SOE? I have no idea.
State-owned enterprise.
Yeah. All right. But I guess you can now own shares of them, but that seems a bit weird. But I guess you could buy in Germany. You could also buy stocks of Deutsche Post or Deutsche Bahn, like like mail delivery or the train system, and they're also partially state-owned. So I guess it's not that weird.
Yeah, I don't know. I don't know what the differences are. Maybe it's like in the percentages of how much is owned. Like, what's the float? How much is owned by the state versus how much is owned by private investors.
Yeah, I mean, I can see that would actually be a good play because they talk about stuff that's hated, right? When somebody hears, oh, this is a Chinese state-owned enterprise, they like American investors would probably be very hard pressed to even consider it. But then, of course, there are tons of companies right now, US companies that are ripping, and they may or may not be partially state-owned, but they might have the government as their biggest customer, right? So like this is very common in defense, for example. So same difference in a way, I would say.
Yeah, I mean, for me, if they're paying dividends, I'm happy to buy it. And it's for critical goods that everyone needs, so I don't have a problem with it.
Yeah, I mean, given those things being true, then for sure, it's worth a look. But then, yeah, I mean, I think you do need to be a bit sophisticated to figure out how to then buy these things. So like buying shares in Singapore or Hong Kong, I don't. Is it as easy as just adding that exchange on your Interactive Brokers, or does it take more than that?
Yeah, I think so. Like my Interactive Brokers is set up to buy Hong Kong shares, so that's pretty.
That's cool. I mean, I think we need. I wish I would have asked him a bit more about outside of the investing world, a little bit more like how's his jiu-jitsu going and family stuff, living in Bali, still happy and etc. But somehow we got down the macro markets track, and I don't regret it. I think it's great. I also seeing him not just as a wealth of knowledge for markets, but also somebody who's living like a pretty cool, unique lifestyle, and just gleaning some insights on that. It's also always worth it.
Yeah, we'll have to remember to put that front and center next time. Go
Yeah,
like,
sure.
hey, Ferg, before you tell us about the supply levels of rhodium in South Africa, how's the jiu-jitsu going?
Yeah, seriously.
How's the
Russian guys
coffee
still
down the street?
Russian guys still kicking your ass, or but yeah, that's pretty funny. But yeah, man, I don't know. I just had a vision of like us all meeting up in China with like family and kids, all wives and kids would be so fun. Meet you guys in Suzhou or Shanghai or something.
Yeah, would be so nice, right? But yeah, let's see. Can't can't control everything, but you can always keep the hopes alive. I mean,
sure.
Nick is coming to visit next in a week and a half. So I'm pretty
Nice.
lucky. Like I got a few friends that have come already. Anya's cousin is coming soon from Seattle. Yeah.
Is Nick bringing family, or is he coming on solo?
Yeah, Nick's coming with his whole family. Even
cool.
parents.
Very
So it's like 3 generations. See the
cool.
motherland.
Awesome. Well, I'm jealous.
Nah, you'll come
I'll
when the time's right.
I'll visit again before long for sure. All right, my friend. Really enjoyed it. Gonna try my best to get this edited and published soonish. And
Yep.
I'm loving the vibes you got going on in the background. Love it.
Yeah. they turned on the music for the cafe at 9 o'clock. So
Yeah, makes sense. Well, enjoy your Friday, and
yeah,
talk soon.
yep, same Elvis. See ya.